AI, everywhere. Wall Street, trembling. Your money, at risk. Hey, it's me again, your friendly neighborhood financial doomsayer. Welcome back to another episode of Don't Say I Didn't Warn You. Today, we're diving headfirst into the AI-infested waters of Wall Street. Buckle up because this ride's about to get bumpy. You've seen the headlines. AI is coming for your job, your relationships, and now, your investments. But before you hand over your life savings to a glorified calculator, let's take a step back and ask, can these silicon-brained money managers really beat the market? Or are we all just falling for the latest tech hype? Let me paint you a picture. Imagine a world where algorithms make split-second trades, analyze mountains of data in the blink of an eye, and predict market trends before your morning coffees finish brewing. Sounds like science fiction, right? Well, welcome to 2025, where hedge funds and big institutions are already living in this brave new world. These Wall Street giants aren't just dipping their toes in the AI pool. They're doing cannonballs. We're talking about AI systems that can process news, social media chatter, and economic indicators faster than you can say market crash. They're using machine learning to spot patterns humans might miss, and high-frequency trading algorithms that make thousands of trades per second. It's like giving the Flash a Bloomberg terminal and a Red Bull Ivo drip. But here's the kicker. While the big boys are playing with their shiny new AI toys, the average Joe is being sold a watered-down version wrapped in flashy marketing. You've seen the ads. Beat the market with our AI-powered investing app. Let our robots make you rich. It's enough to make you want to throw your phone out the window. Or maybe just your entire savings account. These retail platforms are popping up faster than crypto scams after a Musk tweet. They promise the moon, the stars, and a 20% annual return, all thanks to the magic of AI. But let me let you in on a little secret. If it sounds too good to be true, it probably is. And if it sounds magical, it's definitely marketing. Now, I'm not saying all AI investing platforms are snake oil. Some might actually have decent algorithms under the hood, but here's the problem. You have no way of knowing. These black box AI models are about as transparent as a brick wall. You don't know what data they're using, how they're making decisions, or why they're recommending that you bet your life savings on gold futures. And that's just the tip of the iceberg when it comes to the problems no one's talking about. Let's start with bias. These AI models are only as good as the data they're trained on. And guess what? The stock market's history is full of biases, bubbles, and human irrationality. Feed that to an AI, and you might as well be teaching a robot to be a conspiracy theorist. Then there's the oversight issue, or should I say, the complete lack thereof. Who's watching these bots, making sure they're not going rogue or getting hacked? Certainly not the regulators, who are still trying to figure out what a blockchain is. It's the Wild West out there, folks, and the sheriff's asleep at his desk. But let's play devil's advocate for a moment. Maybe AI can outperform humans in some areas. After all, computers are pretty good at crunching numbers and spotting patterns. They don't get emotional, they don't panic sell, and they definitely don't FOMO into meme stocks at 3 a.m. However, and this is a big however, there are still plenty of situations where human intuition and judgment are irreplaceable. AI might be able to analyze a company's financials in milliseconds, but can it understand the nuances of geopolitics? Can it predict how a charismatic CEO might turn a failing company around? Can it sense the mood on Main Street? Just because a robot can trade doesn't mean it can think. And just because it can process more data doesn't mean it can make better decisions. Sometimes, less is more. Sometimes, gut feeling matters. And sometimes, being contrarian, something AI struggles with, is exactly what you need to beat the market. So, what's a savvy investor to do in this brave new world? Well, if you're thinking about trusting your hard-earned cash to an AI, here are some questions you should be asking. Who built this AI? Are they experienced investors or just tech bros who watched The Wolf of Wall Street one too many times? What data is it using? Is it relying solely on historical stock prices? Or is it tapping into a diverse range of relevant information? How does it make decisions? If the answer involves the words proprietary algorithm or secret source, run for the hills. What happens when it's wrong? Because it will be wrong. All models are wrong. Some are just less wrong than others. And most importantly, how much are they charging you for this AI-powered investing? Because if it's more than you'd pay for a low-cost index fund, you might want to think twice. Look, I get it. AI is sexy. It's the shiny new toy everyone wants to play with. But remember, on Wall Street, if you're not at the table, you're on the menu. And right now, a lot of retail investors are looking mighty tasty to the AI-powered sharks circling the waters. So here's the bottom line. AI is powerful, but it's not magic. It's a tool, not a crystal ball. And like any tool, it can be used well or poorly. Don't be passive. Be informed. Ask questions. And for the love of all that is holy, don't trust your entire financial future to an app just because it has a cute robot mascot. That's it for today's episode of Don't Say I Didn't Warn You. If you enjoyed this deep dive into the world of AI and investing, smash that like button. But remember, stay skeptical, stay informed, and always read the fine print. Thank you once again, and don't forget to like this video and to leave your comments. We will reply your questions when possible. Until next time, this is your friendly neighborhood financial doomsayer, signing off. Don't say I didn't warn you.